Good afternoon, everyone. It's 1:30 here. A pretty pleasant afternoon in West London. I hope it's as good where you are. I'm David Paul, and welcome to our VectorVest webcast, a conservative and a proven approach to build wealth quickly and safely on the London stock market. Okay, so that said, I have to do my duty and put up the VectorVest disclaimer. Which pretty much says that although I'm qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and a detailed fact find. I'm allowed to talk about those shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on. And my objective today is to show you how to invest with confidence and outperform the market in a few minutes work a day. And I'm going to try and do that in less than 45 minutes. And the overall objective is to show you how to retire younger with more money than you ever thought you could. And largely there's three ways of doing that. One, capital growth. That may sound obvious, but we want to find shares that are going to grow their share price. That's the first thing. Secondly, we want to find shares that are going to pay us a dividend, and if we want to stick that dividend back into the mix. And thirdly, and this is very difficult in the UK, we could in fact write covered calls on the shares that we've got for an extra dividend stream, and that we can also add into the mix. Now, this is really, really difficult in the UK. As the options market in the UK is largely illiquid, but if you were to apply what I'm going to talk about today to the US market, then writing covered calls on the shares that you have strategically a couple of times a year can quite easily bring in more than the dividend yield, and that makes a considerable difference after a while, but virtually impossible to employ in the UK market. So that's me. Those of you that are watching on YouTube, well, you can see yours truly, but that unfortunately the wrong side of 66, that photograph taken 2 years ago, the last Christmas that we could fly before the COVID portcullis fell. So that taken at the New York Stock Exchange, and so it's about 2 years out of date. I've got a degree in engineering, I've got an MSc in metallurgy, I've got a PhD in mathematics, and I've been trading in the stock markets of the world. I put on my first trade in October 1982 and retired from full-time work in April 1988, and since that I've been trading on my own ever since. Over the last 10, 11 years now, I've been showing people how to improve their performance with the VectorVest product. Initially, I was a VectorVest customer. So what we're going to talk about is the VectorVest system of analyzing shares. And in the short presentation, I tend to use the word share and stock interchangeably. It means the same thing to me. We're then going to talk about something which is quite controversial, and that's market timing, because at VectorVest we believe there's a good time to be in the market, an awful time to be in the market. So we want to try and find out simply and objectively when it's a good time to be in the stock market. And then I'm going to in fact fuse that all together into a safe and robust, mechanical, worry-free investing strategy. And those of you that consider yourselves aggressive traders, this particular plan that requires very, very little work has beaten the pants of most aggressive investing strategies over the last 5 or 6 years. So don't switch off if you think it's too conservative for you. So we're going to start very quickly and run through the VectorVest system for analyzing stocks. And I think that the thing that runs through the whole VectorVest approach is this combination of both fundamental analysis, the search for the value of a share, and technical analysis, which is the study of trends and turning points. And I think at VectorVest we want to try and put together the best parts of both approaches. So shares that have got outstanding fundamentals that are rising, and as we'll see in a moment, we want to buy the darn things when the general market is rising. So let's look at value. And there are three words that are important in the stock market. They are earnings or profits a company makes. And you saw yesterday what happened to JD Sports as the earnings blipped up through the roof, much better than anybody expected. My word, JD Sports has been a great provider. Those of you that don't know me will not know that I lived in South Africa for 35 years, and I came back to the UK full-time about 3-4 years ago. And since that time, JD Sports has been a magnificent provider, and in fact has paid for a great part of this flat that I'm sitting in Notting Hill. So earnings really important. Inflation. If you've been at the party at all, you will know that inflation is being discussed by pretty much everybody at the moment. And is inflation transitory, as the Fed are saying, or is it going to be a part of the economic environment for the next 3 or 4 years? If earnings go up, that's good for valuations, and quite simple-mindedly, the more money a company makes, the more it's worth. Inflation going up is not good for valuations, because invariably if inflation goes up, interest rates go up with it. And that's the debate that's going on at the moment. So earnings, inflation, and interest rates. And based on that, Dr. Bartolito has put together a valuation algorithm for every share in the market every single day. And at VectorVest, we believe that every investor should know what's the stock really worth. And on VectorVest, you've got a number. How safe is the earnings stream? And then some idea about the trend of the share price. These two are fundamental measures of the company, and this is a technical measure of the share price. Is it going up? Is it going nowhere? Is it falling? Buy? Should you be running for cover? Or you should be sitting sweating it out? And unfortunately, at times we have to sweat it out because markets don't move in straight lines. They go up like this, okay? And you've got to sweat out these little bits in between. That's reality, folks. Let's address these now and look at an indicator which measures the long-term price appreciation of a stock. And for long-term price, that should be share price appreciation, I suppose, in relation to what a corporate bond will pay. Now, for long-term, 3 years. That means 3 years. That's Dr. Delito's definition of long-term. So relative value measures the performance of a stock, i.e. the rise in the share price, in relation to what a bond will pay you over the same period. Now, we do this by estimating the earnings or the profits of every company on the London stock market for the next 3 years. So we put a number to the profits next year, the year after that, and the year after that. And we do that by extrapolating from the financial statements and buying earnings forecasts from the world's leading provider of such, a company called FactSet. And we've been doing this for 30 years, so we got very good at it. So we've got a profit flow over the next 3 years. We assume that in some time over that 3-year window, those earnings, those profits, will be discounted into the share price. Not when, just within that 3-year window. And we work out what the projected share price will be. We take the share price, the projected share price, and subtract the share price today to get the upside, and we divide that upside by what a corporate bond will pay. less than 1 of relative value is not good, because that's saying that your stock is going to outperform what a corporate bond will pay. And that would mean that you'd be taking risk in something as intrinsically dodgy as a share, and you could get more money from a corporate bond. And those of you that understand how companies dole out cash will know that the corporate bond holders are well ahead of the common shareholders. Corporate bond holders, I think, only second to HMRC. That's the tax men, for those of you that are not from the UK. Greater than 1, it's not good. Greater than 1 is not bad. And folks, we've found that to satisfy our capital growth requirements, remember our first way we're going to get rich out of this is that the share price increases, that the RV needs to be greater than 1.25. And that's been researched by myself, by our team in North Carolina, and lots of our subscribers, and one in particular, a young man called Mark, and he'll in fact be addressing our national user group tonight on another facet of investing, stop losses. So the first requirement for a worry-free stock that will satisfy our growth criteria is that the relative value should be greater than 1.25. So that's our first characteristic of a worry-free stock. Now, the second VectorVest metric is relative safety, which measures the safety and the predictability of the financial performance. Now, this is an exact number, because to calculate this number, we look at the past, the hard, cold financial statements. So we look at the balance sheet, the income statement, the cash flow statement, all those ghastly ratios, and make a judgment as to whether the financial performance is getting better or worse. It looks at dividends, it looks at dividend safety, it looks at dividend growth, it looks at free cash flow. Now, on a scale between 0 and 2, if the relative safety is less than 1, that's not good. This is a company where the financial performance has been up and down. If you can hear a helicopter in the background, that's the second heir to the throne flying in for his lunch. That's Prince William going in for his lunch. He goes in every day about this time. Doesn't stay long, but he goes in about, we're right on the flight path into Kensington Palace. He seems to have gone. If the relative safety is greater than 1, that's not bad. But for our worry-free methodology, which is largely a hands-off methodology, I want a relative safety above 1.3. And there's plenty of them at the moment. Above 1.3, this is a company that's making money, and all those financial ratios are getting better. It has a very low probability of a surprise. They can happen. We had one in Avon Rubber in the last year, now called Avon Protection. So it doesn't eliminate surprises, but it minimizes them. So what we're looking for is a very special combination of a company that can grow earnings strongly, an RV of greater than 1.25, and have a proven track record of doing that safely. And ladies and gentlemen, there's not that many of them. And once you find them, if the general market is rising as it's been doing for the last 18 months, it's pretty much money in the bank. And I hope that in my Monday afternoon webcasts, I've proved that, because in the companies that I've chosen, and I put my own money into, that fulfill those criteria, they've all doubled plus in the last year. And the companies that I took a chance on that didn't in fact fulfill those criteria have let me down a bagful. So that's been a lesson to me. Those of you that are listening, I know an awful lot of day traders, and I don't know many of them that have outperformed just sitting in those stocks over the last year, doing nothing. And of course, doing nothing is much, much more difficult than it would seem. So the first requirement of a worry-free stock is that our RV must be greater than 1.25. The second requirement is it must have a high relative safety. And in fact, later on when I put together the strategy, I'm going to sort all of the stocks on the London stock market by relative safety to bring the safest stocks to the top of the pile. Okay. Now the third thing is a measure of the trend, relative timing. Very, very important in short-term momentum trading. Not as important in our exercise today. Dr. Toledo then sorts all of the shares on the London stock market by a mixture, a combination of relative value, relative safety, and the short-term trend. And this mixture is known as the master indicator VST. And as a default, all of the shares in the London stock market are sorted by VST. That finds some great stocks. But this afternoon, because we are hands-off, worry-free investors, I'm going to sort all of the shares in the market by relative safety to bring the safest ones to the top of the pile. Now we calculate a stop loss for every share in the market every single day. And the stop loss is a critical part of the worry-free strategy, because although we are in fact only looking at shares with a high relative safety, every now and then one of them can let you down. And I spoke about Avon Rubber. Avon Rubber hadn't put a foot wrong for many, many, many years, or even protection these days. And they then had a technical problem with the gas masks that they're supplying to the American military, and that's caused their earnings and earnings flow to be adjusted down a lot, and the share price has followed it down. So the stop price would have got us out of that, and in fact did get me out of that earlier on this year. I can't quite remember when it was now, maybe late last year. And we're still out of that share. We'll have a look at it in a second. And finally, we put a buy, sell, or a hold to every share in the market every single day. And these are largely trend following measures. For our worry-free strategy, I want the share to be either on a buy or sweating it out on a hold. Clearly, if it's below its stop loss, we don't want it. Okay. So the criteria for worry-free stock is that the RV must be greater than 1.25. And that adds greatly to our ability to achieve the capital growth that we require. The RS must be greater than 1.3 on a scale between 0 and 2. And that finds shares that have got a proven track record of making money, where the probability of a surprise in earnings is relatively low. And finally, the share price must either be rising or it should be going sideways. Later on, I'm going to put in a volume requirement as well, because we want to find shares that have got reasonable daily traded volume. So if we do get a surprise, that we can press the little button and get out. And that's what we're going to try and formulate. So let's just have a look at the VectorVest product itself. If I get out of my PowerPoint, get rid of all my lines, and just go to the front page of VectorVest. There's the front page of VectorVest, folks. There's a heck of a lot of information on here, and the first time you see it, maybe it's a bit overawing, but it's set out like this. So if you're on the go, you can adjust these little boxes, and there's lots of them, to reflect everything you want to see in the market. So you can actually make a judgment very quickly indeed. And VectorVest these days comes in two exceptionally good apps on the Android phone and on the iPhone. Now, I'm going to go to, this is the front page, and I'll explain this in a little bit of detail in a moment when we get into the market timing section. But I'm just going to go to viewers here. And right at the top, we have a company called Crichton's. And I'm a shareholder in this. Not a big position for me because it's relatively low volume. The share price is 130. We believe it's worth 165. So immediately I can see the share price is undervalued. Now you can take this as an eyeball from the stock viewer, or you can actually write all of this and find these in a thing called Unisearch, which I'm going to show you in a moment. But immediately we can eyeball, we see that share's undervalued. It was up 50 pence yesterday. The valuation is a proprietary VectorVest number. The relative value, which is a measure of the share price appreciation potential in relation to a corporate bond, is at 1.49. Now that's anything above 1.25 is acceptable. That's an exceptionally good number. Relative safety is at 1.45. Anything above 1.3 is acceptable. That's a company that's got a really great history of making money. On a scale between 0 and 2, the short-term trend at 1.77 is saying the share price is going up pretty much vertically. And when we put those all together, it's got a VST of 1.59, which is the highest on the London stock market. It's on a buy. Stop loss is 106. Now, I didn't get a chance to explain this. This is CI, which measures the long-term trend. So if you can think of RT as a measure of the short-term trend on the scale between 0 and 2, and the CI is a measure of the long-term trend on the scale between 0 and 2. This is saying that both the short-term trend and the long-term trend are in sync. That's a great place to be. GRT is the forecast earnings per share next year. And a big part of this is added in as a part of RV. So there's a bit of belt and braces between RV and GRT. And if we go on the right hand side here, we can see numbers for PE, etc. And just remember that these and earnings yields, these numbers will be different to the numbers you read in the Financial Times or any newspaper, largely because they are looking back, and this is our best shot looking forward. So Crichton's would be a worry-free stock, and for that reason I'm holding it. If we have a look at the chart, there we are, and I have bought into this twice, just there and just here. So, and it's a small position for me because it's quite it's not that liquid. Those of you that are technical analysts, and those of you that are technical analysts, you don't need to throw your stuff away. I assure you that if you apply some very simple technicals to shares with great fundamentals, you're going to get very lucky indeed. That's what technicians refer to as a bull flag. And if you go to my blog of 2 or 3 weeks ago, I actually called that on paper. It's date stamped and just right there at 100. And it's gone up 30% since that. Those of you that are technicians will notice that we have a pennant here. I think it, yeah, just there. That's the first attempt. That's the second attempt. That's the third attempt. And it broke on the fourth attempt. The pennant's got 5 waves in it for those of you that are die-hard technical analysts. This is earnings per share. And you can see how this is rising. Not as linear as I would like, And there's our VectorVest valuation right up here, saying that at the moment we believe this thing's worth 160. So maybe a bit more to go. This stock has been great. It's called Cape Tech. It's sort of Anglo-Israeli company in the cyberspace security business, which is really hot at the moment. Let's go back a bit and have a look. I'm also a shareholder here, but I have to make it very clear that, as I say, it's suitable for me. It may not be suitable for you, but we've had a great run. It's up another 30p today. 404, we believe it's worth 578. It was up 14% yesterday. There was a deal. Okay, there was a deal. The RV is a whopping 1.72. Those of you that have come to my Monday afternoon things will know that anything above 1.5, I have a special ranking for it. It's called Bloody Marvelous. That's a great number. It drives the share price. So although we want the RV to be greater than 1.25, the bigger the better, folks. RS, it's a name stock. RS is 1.31. In my Unisearch in a moment, I've excluded AIM stocks, but I keep my eye on them, and this one caught my eye a few weeks back. Why do I exclude AIM stocks? Well, sometimes when a market sells off, you'll find that AIM stocks the bids just dry up, okay? And sometimes they're very difficult to get out of if you have to get out of them. Largely inhabited by small funds, small funds and small investors, and if they get frightened, the bids just dry up completely. So you have to be very careful in AIM stocks. You need to be better in AIM stocks because it's more difficult to police your stops. And secondly, the spreads can be wider, the difference between the buyers and the sellers. But this stock has been just marvelous, and as you can see, RS is 1.31, which is okay. RT is good. The CI couldn't be better. It's on a buy and should grow earnings at a whopping 39% next year. So if we have a look at this stock, there is the earnings per share. Now that's really that's a much better looking earnings per share than in Crichton's. This stock has earnings have risen from 10 pence to 18 pence over the last year. That's the chart. Now I got interested in this stock just here. Those of you that know my work will know that if you see a gap out of an area of resistance and a share that's undervalued, that's growing earnings strongly, that's something to be wary of. I call that breakout of a resistance level, or the rocket launcher, and I only apply it when the fundamentals are good. Now, I worked in the City of London for a long time. Okay, it's years ago now. I worked on the dealing floors in Johannesburg for a long time. I know that the traders who are great traders in the main, otherwise they'd be fired long ago, have a list of stocks that they can buy, and the list of stocks are handed down by the fundamental analysts. So whether you're a die-hard technician or not, I assure you the fundamentals do matter, because those are the shares that the technical traders at the institutional level will be allowed to trade in. This breakout of that level, that gap, that's called a breakaway gap, and invariably that's a great place to get in. Although I didn't get in there, I only got in at £3 just here as this came back. The other Monday afternoon, I told everybody that buy a pullback to that level, and yet it pulled back again. And yesterday, this company's now doubled its size. It's run by an Israeli fellow who everything he touches turns to gold, a guy called Terry Sagi. So and today it's at 4:30 the last I seen. Okay, so I'm very, very happy with that. So folks, it's relatively easy to find these. I wrote about Chun in my blog a couple of weeks ago. So Lion Trust has been, it's slightly undervalued now. Okay. But the RV is 1.56, the RS is 1.48, saying there's lots to come. As you can see, the CI 1.58, GRT 30, unbelievable. Now we've had such a great run in this over the last year. So that's over the last year. And those of you that come to my Monday afternoon sessions will know that we bought into it just there. And I'll show you where these green lines come. We bought into it just there at slightly under £10. Now it's now at £24. So it's been a great run, and I'm not saying that we're going to have that sort of returns all the time. I'm certainly not saying that. But nevertheless, shares that are growing earnings strongly and safely are a great place to be. So I hope it gives you an idea of the type of stock that we're after. Any questions about that, folks? I know I've maybe gone a bit quick, but I've been told by many that my talks are too long. That people have only got enough time to listen to me for about 45 minutes, and I've been going 30 minutes already. So I know it's controversial, but VectorVest believes I'm asked by Investor Success, can you exclude investments? Yes, of course you can. I can just put a line into Unisearch, sir, or madam, and get rid of all the investment trusts. I'm not big on investment trusts myself. I says, when do you sell? In this portfolio, Ash, I'm pulling my stop loss up at the VectorVest stop loss. So it's a long-term position trading portfolio. Does that make sense? If you're a swing trader, then I can, if you want to swing trade, if you want to buy these things on leverage, then I can show you how to find targets. And I'm going to do that again next Monday afternoon at our Q&A session. If you, because you're quite right, if you're trading these with spread bets and you're leverage 5-to-1 plus, depending on your spread betting company, then you can't handle the pullbacks. But when the market is cooperating the way it's been cooperating over the last 18 months, then the best thing to do is to do nothing. Get into really, really good shares with wonderful fundamentals that are rising, and do your best to try and sit in them. Okay, and that's been a very good strategy. I do a YouTube video a couple of times a week, and sometimes I get embarrassed to say that I've done nothing in the UK. But you saw the performance in Lion Trust Asset Management. The best thing to have done was nothing, absolutely nothing. And just remember, all those stocks, I banked dividends in those as well along the way. And it's what my old rugby coach used to say, Ash, let the ball do the work. Okay, let the ball do the work. That's what I'm trying to do. Okay, and it's quite new for me, Ash, because I was a swing trader all my life as well. But now that I've got VectorVest to find the very, very best stocks, it's much, much better to just let the darn things run. Okay. So the mantra, ladies and gentlemen, is to buy rising stocks and rising markets. And I'm not going to talk about short selling. There will be a time for short selling, but this conservative strategy is not a short selling strategy ever. If you're short selling, invariably in the UK, you're going to have a CFD account. That means you've got leverage. So short selling, essentially you're going to be swing trading, and that's a completely different topic. It is my advice that until you're buying a share at 10 and selling it at 15 and going down the pub to congratulate yourself, then leave the short selling to somebody else. It's just more difficult. You're dealing and competing against a completely different type of foe. Nobody believes me in that until they have a go. Okay, but I assure you that shorting You need to be better. Your entries need to be better. Your exits need to be better. And of course, if you get it wrong, you get caught in what's called a short squeeze, and that's very painful, just as painful as it sounds. For example, the market was completely short of Ocado, and Ocado did a deal with some crowd in the US, starts with K, I can't remember the pronunciation, and Ocado doubled and trebled, and those guys couldn't get out. They just couldn't get out. And many leading blokes with many years of experience lost their jobs in that completely. So a squeeze is a very painful place. We believe that being on the wrong side of the market is the worst thing that can happen to investors. It doesn't have to happen to you. And of course, if you listen to that, what's his name, that Jim Cramer fellow every afternoon who jumps up on the TV screen, God, I hate that guy, then he tells you to ignore market direction completely. I believe that that's as close a metaphor as I can get you for a stock market. The darn things take a very long time to get up there, and they fall very quickly indeed. And we've had an exceptionally good run in the UK. I've had an exceptionally good run in the UK, and it's very important to me because coming back from South Africa, I largely had to start again. And you know, my property in South Africa, a lovely property. It's to buy an equal property here, I would have to pay in pounds what it's worth in South African rands, and that's a 17-to-1 difference. So I'm not going to give that money back. So I'm watching it very carefully at the moment. All is good. So this is the front page of VectorVest UK, and I'm going to go to the product itself because it's a bit bigger than my PowerPoint. If I go to the product, there we are, go to the front page. The front page is, as I say, can be set. This is the default setup, but all these little boxes you can set up to reflect what you want. Okay, all right, and two most important words, folks, on VectorVest are these two. Down, up. What does that mean? Well, we measure the London market by a thing called the VectorVest Composite, which is an equally weighted index of all the shares we follow, 2,200 shares. Down, up means that the short-term trend, the first word, is down, but the underlying trend, the longer-term trend, is up. And for our worry-free strategy, the most important number is this. It's called a confirmed up. And that confirmed up is no more than the underlying trend, the second word, confirmed by price action. Now, I'm going to go into a chart in a second which will show you this. But if you haven't got the time, or you simply don't like charts, all you've got to keep your eye on is this call. And I don't care how busy you are, on your phone, you can have a look at what the stock market is doing every day. If you're in sync with that confirmed up, you're going to make money. If you are not, if you're buying stocks and there's a confirmed down in place, and I don't think we've had one here, it's been confirmed up for a long time now. If you're buying stocks and you've got a confirmed down in place, then you can easily lose money. So a quick glance every day to see, is the call up, is the call down? And you won't have much to do because it tends to stay up for many weeks and months at a time. Now, this traffic light at the top, which is also on the app, tells us the strength and the momentum and the market breadth of the short-term trend. Now, the short-term trend is down, and it's down with a reasonable amount of conviction. And the little box here says VectorVest does not advocate buying stocks at this time. So if that's up there, you do your best to sit in your hands and do nothing. Although we've got a confirmed call up, which measures the long-term trend, the short-term trend is down. Now, we have a young man down in Wales. Normally he's here. I'm not sure if he's in the room today, called Carwin, who some years ago, when we were putting this together, suggested that the best time to buy stocks is when we've got a confirmed up and the strength and the conviction of the short-term trend is also up. In other words, the pointer's in the green. So for permission to buy stocks, we want a confirmed up in place, and I want this pointer to be in the green. And when the pointer's in the green, it's going to say VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Following the rules, getting yourself out of the way is a challenge. That's for sure. Just doing what the damn thing tells you to do can be a challenge. Those of you that haven't traded may find that hard to believe. You'll find it out that very quickly. Oh, Carwin is here. Hi, Carwin. Let me have a look at the VectorVest composite. Now, if you click on timing, we can go to the market timing graph. And there it is. That's the VectorVest composite, folks, over the last year. And I'm going to go back to this. You remember last February, March, where this thing fell out of bed. This is the lows in March, and we've moved up pretty strongly since that. This is when, this was a Monday afternoon where the Pfizer vaccine, I think it was the Pfizer one, that came out first, and this caused this market to go up strongly. Now, this is an equally weighted index of all the shares that we follow on the London stock market. Now, down below here, I've got drop down, and these drop downs are all the VectorVest market timing systems. The confirmed calls are the longest term measure, and this is the measure that we use for worry-free investing. Remember? And I click on that, and then all of a sudden, there's the confirmed down. That's a confirmed up. That occurred on the 27th of April last year. We had a confirmed down here, which came to nothing. The old Pfizer vaccine dug us out of trouble. We had a confirmed down here, which came to nothing. At the moment, the market is selling off, but we haven't come anywhere near a confirmed down. Ladies and gentlemen, when I get a confirmed up and the pointer's in the green, I want to buy stocks. I want to be fully invested when the market is rising. I want to be fully invested when the market is rising. Now, what do you do when you get a red triangle? And there's going to be one here. I don't know whether it's going to happen now. Is the market going to bounce off that old high? I think it probably is. But when you get a red triangle and you're fully invested, watch your stops carefully. Do not get out. Only get out if your stock closes below the VectorVest stop loss, and the program will tell you that automatically. So I got in here, and in fact I got in a little bit before there. Naughty of me, I know, but I was in a bit before that. But in there, on this pullback, none of the high RS stocks were stopped out. The high RS stocks tend to be very resilient in a small pullback. None were stopped out here either. Unfortunately, somewhere between here and here, Avon Rubber fell out of bed. In an upswing, we're very unlikely to get stopped out of a high RS stock. In a downswing, we're much more likely to get stopped out of a high RS stock because the general market is falling. If the general market is falling, folks, watch your stop losses very carefully. If you get stopped out, just build a cash position. When you get the next confirmed up, go back to being fully invested. Now, on this one, I wasn't stopped out of anything. On this one, I wasn't stopped out of anything. In February, I was stopped out of the whole damn lot. There, that was a frantic little morning. Out of everything. Was totally in cash in this bit and then got back down here again. And that wasn't easy down there, and you should have seen the emails that I got from people telling me I was a complete idiot. The world was going to fall apart. It's always like that. When it's time to buy, you won't want to. Similarly, when it's time to sell, you won't want to. So that's the process. If there's a confirmed up in place, you want to be fully invested. Sooner or later, you're going to get a confirmed down. Don't do anything. Watch your stop losses carefully. If you do get stopped out in a downswing, build a cash position. So if you get stopped out of 2 stocks in that pullback, then you would be 80% in stocks, 20% in cash. When you get the next confirmed up, replace. Go back to being fully invested again. And that's the process. It couldn't be simpler. And on VectorVest, you can set it up with a thing called the Genius, and it will email you every evening when there's something to do. And there's very, very little to do. In fact, sometimes I'm embarrassed in that video that I do that I've done nothing. That's the process. So let's see how we can actually make this tick. Now, you can actually eyeball these stocks from the stock viewer. And that's what one of our London leaders, Susan Thornborough, who's unfortunately picked up COVID, God bless her. And that's what she does. And she's demonstrated what she does frequently at our user groups. And hopefully she'll be fit to chair. She chairs the national user group, and hopefully she'll be fit tonight. I'm not sure yet. But Unisearch will do this for us automatically, where we can actually write a simple search to find stocks that suit. And Bartolito says that good portfolio management starts with buying the right stocks. Hello, Rob. Rob, when the share falls below the VectorVest stop loss, it closes below the VectorVest stop loss, the rules are simply get out. And it would be as a trailing stop loss. It'll trail if the share price has moved up, and then you get a confirmed down, then it'll be, you'll use the VectorVest stop as a trailing stop loss. So I've tested this, and our customers have tested this. The guys in North America have tested it. They're lucky in that they can add in covered calls to the mix. It makes one heck of a difference. So the key is relative safety, folks. We want the RS to hold up well above 1.25. I would prefer above 1.3. We want the earnings to be strong, and remember GRT and RV are pretty much one and the same. So we want the RV to be greater than 1.25. And I've written a very simple Unisearch, which is in your program. The stock's the price must be greater than 50 pence. 50 means 50 pence. Now, I put on a very small daily volume here, and you're going to have to judge that in relation to your own portfolio. Only 50,000 as measured by a 50-day moving average of volume. Some people only look at the FTSE 350 companies, and that will mean that invariably your volumes will be high. I'm not looking at AIM, although that Cape stock that I've got is on AIM. Relative value is greater than 1.25, and the stock is not on a sell. And the shares that come from that, I sort by relative safety. Now, we could easily put another line in there which excludes investment trusts if you wish. Ash says, can the system be set up to sell if the price falls below the VectorVest stop loss? Just remember, Ash, that VectorVest is an analysis program. And the analysis program, we're not a broker. Now, in the US, VectorVest can talk to a broker, but not here because the FCA says that that would be financial advice. So there has to be, the FCA says there has to be a manual loop. So we can send you an email that will tell you that the share that you're holding is below the VectorVest stop loss, but you still have to execute it. That makes sense. Alan says, where's RS? Well, what I've done is that I've sorted all of the shares by RS. So it finds shares that satisfy these criteria. It then sorts them and brings the top RS stocks to the top of the pile. That makes sense, Alan? Okay, sorry. Okay, thank you, man. So we use the confirmed signals, and remember Carwin's qualification. We get in when we've got a confirmed up and the pointer is in the green. And that tells us that the long-term trend is up and the short-term trend is aggressively and decidedly up as well. And hopefully that'll get our positions well into the money before we get a short-term pullback. And both those signals, the short-term and the long-term, are all on your app. So if you're on the go, then you can get that information in a few seconds. And let's face it, we spend half our day looking into phones anyway. That, again, is the VectorVest composite over the last, year and a half. And I'll do this for us in a second. That's since last April. That's when we got that confirmed up last April. And largely, I haven't done a great deal with these stocks since. But that portfolio was up 75%. The market's also had a good run at 38%. So I don't know what that is. That's darn near double, if not what the market has done. And just remember, folks, that all of these companies have paid a darn good dividend in between. And of course, we should never have taken a 35% loss in Avon. I didn't. I took 15 or 16% of a pullback in Avon. That shouldn't happen. We had a confirmed up in November. And again, since November, we've pretty much nearly outperformed 2x of the market, and Plus is the only loser there. And I assure you that when you've got a portfolio that everything is up, that gives you a sort of a swagger. But when you've got Lion Trust and Clipper up by 72%, that gives you an extra swagger in the old golf club on a Saturday afternoon. So I'll run these for us now. And that's why I say I know an awful lot of day traders, and they sit, an awful lot of day traders, and they sit in front of their screens all day, every day, and very few of them have outperformed stocks with a high RV and a high RS when the general market is rising? By doing nothing, by letting the ball do the work. If I go to Unisearch, this is Unisearch, and I do a course once a year called the ISA Millionaire course, and this is a part and parcel of it. And that is the search that I spoke about a few minutes ago. It's sorting shares by RS, RV greater than 1.25. That's the volume. We're not on a sell, in other words, by inference, buy and a hold. I'm not on AIM, and I want the share price to be above 50 pence. Now, that's last. On this date, you can go back and test any date, but we had it confirmed up on the 11th of November last year. And that's conveniently marked on this for us. And if I run that search, that's what we get. And I'm shareholders in most of these. I'm very happy. Not plus 500. Lion Trust, Pershing Square, CCC's been great. Cranswick's been good. Clipper has been great. So if I just simply quick test the top 10, that's the number that I presented a second ago. Up 30%, the market's up 16%. Plus they've all paid a really, really good dividend. Toto, I hope I got that right, sir. Does one have to look at VectorVest every day? Well, I don't think you would have to look at it every day, but I think that if you have a confirmed down, then definitely you should look at it every day. And it's only going to take a second to do that. But I think that in this presentation, right at the start, I suggested that we can outperform the London stock market by 10 minutes of work a day. So when the general market is rising, then there's pretty much nothing to do. When the general market is falling, then there's a much higher probability that you'll have a stock, high RS stock, that falls below its stop loss where something has to be done. VectorVest can be set up through a thing called the Genius to actually email you when there's something to be done. If we're in the US, it can be linked up to several brokers, and the execution can be done while you're sleeping. But I think that if you said that you got to look at the program once a day for a few minutes, I think yes. Okay, and you've got to say to yourself, well, how else am I going to get rich, you know? So it doesn't seem a big deal to me. Lord Sugar, the other way of getting rich is starting your own business. Lord Sugar says so beautifully that starting your own business is as close as a man can get to having a baby. How's that? I think just take it that you need to look at the program once a day for a few minutes. 2019. 2019, let me get rid of that, was a great year for us. And going into the COVID sell-off, I was up 48%. And clearly I gave 15 to 16% of that back before I got stopped out of all the shares. So in 2019, I was up that 48%, minus 15 or 16 before I got out. So still quite respectable, 30%. And I kept the dividends, of course. Performance over the last few years has been great. That was the performance chart in 2019. In 2019, there were 2 trades, just there, 2 trades. That's all in 2019. So not a lot to do. John says, how do you replace stocks since once you need to replace a position when the confirmed call has been up for a long time? Well, John, you just simply run the search and you replace with the stock that you haven't got. So if you got stopped. That's what I had to do with Avon Protection. So if that happened to us now tonight, we would run the thing today, and some construction stocks coming in. I'm holding Bellway, Lion Trust, 3i. I haven't got, but I would be tempted to buy into it. I looked at it in our blog. Crichton's, a lot of these that I've got, but you would just run again and find a stock that you haven't got. Okay. A lot of construction stocks coming up at the moment. I go through the detail of this, and I'll show you where in a second, but we don't want to have any more, in our 10 stocks, we don't want to have any more than 2 from any one sector. That makes sense. So that's the process. The process is very simple indeed. I haven't had a great time to show it to you. I've tested it over 20 years, and that was from 1996 to 2016. Since 2016, folks, I haven't done much back testing. I test it going forward with my own money, and that's been working great. And if I was managing your money, I would put 80% of it into this methodology, for sure. That's over that 20 years, that's produced, this is in the US, 17% a year, which is double the S&P. Wasn't easy. There's 2000 to 2003. That's the global financial crisis where we went completely to cash here. And since that, it's flown up over the last couple of years. Don't worry, there'll be a confirmed down soon, and we'll have to sit in cash. We could easily have a period like this again. But at the moment, and the present moment is the only thing we can control, all certainly looks good in the UK market. So if you're confused, I've got a plan, as I'm sure you've anticipated. That was me. I tried to do this myself, and this was when I was in I went to South Africa to play rugby, folks. I went to play for a side called Transvaal, and I had a job at De Beers. And when I started to trade, I was playing to 60,000 people every Saturday afternoon. I know we've got at least one man from Durban. I played at Kings Park many times, Doug, against Natal, Transvaal against Natal. We always beat them as well. The annual reports and the interims just kept piling up in the corner of the office. I just couldn't get anywhere near them. First of all, I didn't have the skills. I didn't have any formal financial training, and I didn't have the time, and quite honestly, I didn't have the inclination. So I started to trade purely technically. And over the last 10 or 12 years, now that I put my technical analysis together with the very, very best stocks, that's increased the performance significantly without a great deal of work. So if you want to break out, I have a little plan. It's going to take 30 days, and I'll tell you what it is. I put together a course. I've had it professionally narrated, and the objective is to outperform the market in 10 minutes a night. So I think that certainly for the first 30 days, you're going to have to look at it for a few minutes. But what's the alternative to getting rich, you know? I couldn't find it. You had to be born with it or marry it, which I unfortunately didn't happen to me. The first step is how to analyze any stock in 30 seconds. And that's the detail of what I spoke about a few minutes ago. Module number 2 is all about risk. Minimizing losses, maximizing gains, position sizing. Vitally important. So in module number 1, we sort the good from the bad. Module number 2, we get rid of the bad. Module number 3 is market timing and the detail of when it's safe to be in the market so that you can actually now know when it's time to buy. Module number 4 is what to buy. and various cherry picking checklists to suit your objectives, of which one is the worry free. And then number 5 is a simple plan to put that all together. Now, in the US, they charge a fortune for that, but we're new in the UK, so if you roll up your sleeves with me and you go through all of that, it's £5.95. I'm nearly embarrassed to say it. VectorVest.co.uk/proven. And that'll take you to a little landing page, and if you stick in your details there, we'll get you going straight away. It also includes 30 days access to VectorVest World, and that's the UK, the USA, Canada, Australia, whole of Europe, excluding Scandinavia. And that's worth £49 on its own. Now, if you want to stay with VectorVest after that, then VectorVest will be debited at £49 a month. If you don't want to stay, then stop it. And I've been with VectorVest now for 11 years, and we haven't had one complaint about credit cards in 11 years. And we are also authorized by the FCA, and we take that very seriously. So it cost a packet to get that level of authorization. And then, of course, the last thing is that we want to take care of you, and we want you to be a customer for the next 30 years, not just 30 days. So I do a session once a week, talking about. We do a national user group, which is tonight. We do a international user group, which is on a Saturday afternoon. They're all recorded. And my colleague Glenn in the US does a, what's it called, Trending Thursday. So lots and lots of help. And we have an 0800 number that gets you through to our call center. It's open from 12 o'clock lunchtime to 12 o'clock at night. And that's your first port of call if you have any problems. And we've done this with quite a few people. This young man is a farmer. He's from North Somerset. He's been in the market for 30 years and he's never made him in a cent. He's always been buying at the top and selling out at the bottom. And he's finally got a written plan, which is the worry-free plan. And he got into the market last November and is doing very well. I'm glad to report. So if you don't think it's the best £5.95 you've ever spent, then come straight here to Pembridge Square in London. I'll give you the money back. All right. So VectorVest.co.uk/proven. So that's me. I wanted to try and get it done in 45 minutes. I failed once more. I'm sorry about that, but I hope you enjoyed the presentation, and I look forward to working with you folks. Any questions before I sign off? Idolus says that he's got poorly performing stocks. If I weed them, it means a significant loss. Well, if you keep them, you're just kidding yourself, I'm afraid. I think you need to, that happens to us all. I think that you need just to get rid of rubbish and get yourself into some good stocks. Yes, Ash, of course, you can look and run those stocks that you've got through VectorVest. Have a look at their relative value. Have a look at their relative safety. Have a look at their trends. Rob, I don't think there's much to it. Rob asks, he's still not sure about the trailing stop. It's just that the VectorVest stop loss will go up behind the price. Remember, it's a function. It's a 65-day moving average of the price adjusted for the fundamentals. So, for example, in Lion Trust Asset Management, if you put on the VectorVest stop loss, it's trailed the price up the page. And you've got a choice. You can either get out at a target, or you can actually allow the VectorVest stop loss to act as a trailing stop loss. And of course, there's many, many, many other ways of getting out as well. So I hope that helps, folks. I look forward to working with you folks and going through those. Now, those of you that have got VectorVest, the course is part and parcel of VectorVest. Those of you who haven't got VectorVest, you'll be directed to this in the welcoming emails. But if you go to training, there's the course just there as a part of VectorVest. Okay. Also, lots and lots of other really good stuff under the navigation training series. Okay. So if there's no more questions, I'll sign off, folks. Gary, it's £49 a month afterwards. If you think that VectorVest is going to be of use to you, then it's £49 a month. It's on a month-by-month basis, and my promise to you is that if I and VectorVest can't make you money, you stop at any time. So there's no contracts. As I say, I've been in the market and working with VectorVest now for 11 years. We've never had a single problem about a credit card in that time. All right, folks, take care of yourselves. Bye now.